Hello guys, good evening everyone. So we'll start in few minutes. Let's wait so that others can join and we'll start in next 5 minutes. So yes, classes were not conducted yesterday because I was not feeling well. So yesterday there were no classes conducted. Good evening guys. A very warm good evening to all of you. Hi Singa. Pretty much better than yesterday at least. Thanks for asking Singa. Good afternoon, Ines. Good afternoon. Let's wait for a couple of more minutes, guys, so that others can join as well. Then we'll start. I'm fine, Nikhil. I'm better than yesterday. So, yes, we'll be continuing with the session. Let's wait for a few more minutes, a couple of more minutes, so that others can join. Yesterday, I was not feeling well. That is why the sessions were not conducted. Yes, today we will be making a merger and acquisition model. And in the next class would be the last class for 0224. Next class, that is on Saturday, will be conducted on the topic of merger and acquisitions theory, and that would be the last class for 0224. After that, you will get some time to prepare for your exams, write your exams. It is last class for 0224, not for your batch NS, but 0224. Is my Excel stream visible? Yes, for the batch which started in February. How many more modules are remaining for batch 0424? Around 2 months of content. That is five, six modules more are remaining for your class RH. Urvashi, if you are from 0224, yes. So the batch which started in February for them, it is the last class for the day. Is the screen visible? Guys, no for February batch. For May batch, you still have a couple of months of content still remaining. There is a website called Yahoo Finances. See, you can use that. Yahoo Finance. Yesterday's class was cancelled because I was not feeling well. For March, if there was March batch, April batch. April batch, still 2 months of content is remaining. Sir, can you please let me know where is the PDFs are saved in 11 because I have never had necessity to download it from there. Okay. So is my screen visible? I have got access of the LMS portal. Just give me a second. How many classes are, when does placement starts? So once you are done with your mock interviews and exams, then the placement part will start. Mock tests for us, no mock tests, but yeah, you will be having 6 exam tests. Please share the sheet. I have not started with any of the model yet. Batch 0224 class month. For 0424, there's still 2 months of content is remaining. Is it last academic session for us? I mean portion. Yes, for those who are from 0224, this would be the last session for you. Guys, those who are not able to find PDFs and all, please do raise a ticket about it and the team will get in touch with you to help you out. All all the content that will be asked in the exam will be uploaded in the PDF format. Once you read those content, it would be sufficient for you to clear that exam. Nevertheless, let's start with the session. Alt HOW 1.8. So we are going to start with merger and acquisition model. Merger and acquisition model. Alt HMC. Apurva is asking me to wait for 5 minutes. May I know the reason why, Apurva? Why this is last? You told it will be last next Saturday. So yes, this is the last module, not the last class. The class will be the last class for 0224 will be next week, that is next Saturday. This is the last module, that is merger and acquisition. Okay. So guys, be ready with your Excel. We will be starting in couple of minutes. I am waiting for Apurv's confirmation. He is facing some challenges, but didn't get any response. At raised ticket regarding the schedule of the assessments. So if you have GA, might have raised the ticket. Uh, you might have raised the ticket related to the academics on last Thursday, Friday. It was my week off, so the ticket response was not given. You will receive the response by Monday. That is tomorrow. For March batch, yes, we are starting with LBO concept today. Merger and acquisition along with LBO is what the And the topics regarding LBO and merger and acquisition, the theory part we are going to cover next Saturday. What are the for placements and all those things? You will have to raise a ticket. The team will connect you. I'm not the best person to assist you in it. There are multiple opportunities in the market and various job profiles in the investment banking domain as well. So please raise a ticket about it so that the team will help you out. And sorry guys about class, just join. We have not started anything yet. We are just starting with the lecture now. So tell me, what are the elements of the balance sheet? What are the elements of the balance sheet? Basically, when we are making a merger model, we will be making two companies, taking an example of Adani and acquiring entity. We will be taking hypothetical data for the simplicity purposes of understanding the concepts of merger and acquisition. We will be taking, so you will have to raise the ticket through Ask a Doubt itself. Assets and liabilities. True. Now, how would you term assets and liabilities? What are assets and what are liabilities? What are assets and what are liabilities? Current assets, fixed assets. Okay. Can I say, first of all, what are the two companies that we are evaluating? We are evaluating, first of all, I am making a hypothetical balance sheet for Adani Enterprises. Now, in a balance sheet, okay, anything which gives us a future benefit is an asset for us. Okay. Okay. So can I write liabilities as my sources of funds? My sources of funds, equity and shareholder liability, shareholders equity and other liabilities. In sources of funds, I have my sources of funds and I have my applications of funds. Basically, in a traditional balance sheet, it's nothing but assets and liabilities. Assets are nothing but my applications of funds, the places where I have invested my funds. These are nothing but assets. Sources of funds are nothing but my liabilities. Yes, Deepak, please ask about your queries. We have, what are sources of funds? Equity share capital. Then we have other equity. We have debt and we have payables. So debt is nothing but loan, correct? Now, debt includes short-term and long-term borrowings both. Now, let's say The equity share capital is 10 million. Other equity is 5 million. Other equity includes reserves and retained earnings. My debt is, let's say, 4 million. Again, this is a hypothetical data to make you understand the concept of merger and acquisition in a simplistic way. Payables, 1 million. My total liabilities would be how much? Yes, Deepak, please do ask. I'm waiting for your question. Total liabilities is equals to sum of all the liabilities that are above, which is basically 20 million. These are assumptions. Yes, these are hypothetical figures. Now, in application of funds, I have my set of fixed assets, let's say worth 5 million. Inventories, 3 million. Receivables, let's say it's 1 million. And cash, can anyone tell me what would be the cash if these are the only assets? Any idea what would be the cash? Yes, you are correct. You will be receiving mail about it. It would be the balancing figure, correct? Is equals to this minus this is my cash balance, that is 11. Let me copy the format. Try using keyboard as much as possible. This is balance sheet of Adani. Alt HOI. Alt HOI. Okay. We will come to that. What is LBO? We have not discussed that part yet. We have not yet discussed that part. Wait for a few minutes and we will discuss what is LBO. This is total liabilities, total assets and total liabilities. Fair enough. Now, similar to this, Adani is going to acquire NDTV. So Adani is my acquirer. Adani is my acquirer. Adani is going to acquire NDTV. So Adani becomes my acquirer. Now, if Adani is the acquirer, what would be NDTV called? If Adani is the acquirer, what would be NDTV called? So one who is acquiring is acquirer. The one who gets acquired, that is NDTV in our example, is acquiree. It is called acquiree or target. Acquiree or target. One who acquires is acquirer, and one who gets acquired is target. What we are doing over here is, let's assume that Adani is 10 times bigger company than NDTV. Adani is 10 times larger company than NDTV. So NDTV would be 10% of Adani. All the values of liabilities and assets. We are punching over here into 10%. Again, this is a hypothetical balance sheet. Next, there is something called a standalone balance sheet and consolidated balance sheet. Now, what is standalone balance sheet? Standalone balance sheet only has assets and liabilities of the acquirer. Standalone balance sheet only has assets and liabilities of acquirer. If acquirer has acquired the other company, that company becomes a subsidiary or associate depending upon the percentage acquisition. I'll repeat again. If acquirer has acquired a company, that company is either a subsidiary or an associate depending upon the acquisition. So if acquisition has a control, if the acquirer has a controlling stake, then it is an acquisition. Or if the investing company invests between 20% to 50%, below 50%, it is called an influential shareholder and be represented in the balance sheet as investment in associate. Right now, we are talking from the controlling shareholder perspective, that is acquisition of 100%. So we are assuming that Adani is acquiring 100% of NDTV. This is Adani standalone balance sheet. This is NDTV's standalone balance sheet. When Adani acquires NDTV, Adani will have to present a consolidated balance sheet. What does the word consolidated says? What idea do you get from the word consolidated? Combined of both, true. Here, the assets and liabilities that is present over here is the financial statement is related to Adani only. When Adani acquires NDTV, Adani will also have to report performance of NDTV in its financial statement. All assets, when acquirer acquires a target, it absorbs their assets and liabilities. So this would be, so acquirer have to report a consolidated balance sheet representing assets and liabilities of their own company as well as of their subsidiaries. Now fixed assets of Adani would be, so yes, a consolidated balance sheet contains assets and liabilities of both acquirer and target. Fixed assets, 5 million of, in Adani, 0.5 million of NDTV. Same will go for inventories, receivable, and cash. Debt, similar to asset, the acquirer will absorb liabilities as well. Even I don't know, Shubhangi, some of the people were complaining, but I think the issue will be resolved soon. I don't know what is happening on that. Even I am very stressed out because of it. Give me the value of payables, guys. It would be 1 million plus 1.1 million. Now, shall I add equity share capital of Adani with equity share capital of NDTV to get the total equity share capital? Shall I do that? Think about it, please. Maniar says no. And if not, why not? And if not, why can't I do that? Where am I wrong in doing so? Think about it. Take your time and think about it. As we are acquiring, it should that be an expense, sir? Because in Adani, NDTV is asset and in NDTV equity, Adani is liability. So it should be a knock off in consolidated balance sheet. Okay, I think share price is different, but share price has nothing to do with book value of equity. Equity share capital is reported on book value and not in market value. So share price has nothing to do with it. Think about it. Okay, let me do it and then try to make why I would have done this. Now think about it. Guys, think about it. Anyone? Someone? Okay. You are correct, but not exactly. Okay. I agree. I got your point. GA. Now, when Adani acquires NDTV, let's suppose I have acquired your company. Whom will I pay the acquisition amount to? When I have acquired your company, whom will I pay the acquisition amount to? Option A, the equity shareholders. Option B, debt holders. Or option C, to the company. When I say I am acquiring a company, what am I doing? Basically, I am buying equity shareholders. When I am acquiring a company, will I give it to the management of the company? When I say I am acquiring a company, I am buying out a company. Whom will I buy out company from? When I am buying out a company, whom will I buy out company from? I will buy out company from to the person who is the owner of the company. And who are the owners of the company? No, top management are employees of the company, not the owners of the company. The shareholders of the company are owners of the company. Therefore, when Adani has acquired NDTV, don't you think Adani have paid off these two people, paid off equity, share capital, and other equity, paid off the equity holders of the company? Do they have any residual interest remaining in Adani Group? Sorry, NDTV Group. Now, if 100% acquisition is made and they have and equity shareholders have been paid off, what I am saying over here is once Adani acquired NDTV, this is NDTV's balance sheet. When Adani acquired NDTV, it absorbed all its assets and liabilities, and it also paid off its equity shareholders. So equity shareholders no longer have residual interest in NDTV Group. That is why we won't include equity share capital of NDTV. Now the question is, then how come this will match? How come this check line will get matched? Don't worry about it for now. We will match it. Let's jump on to the income statement. Let's just jump on to the income statement. Income statement of Adani Enterprises. Okay. Income statement of Adani Enterprises. Please, guys, I forgot the format of income statement. Please help me with building an income statement. Please give me the opening line item of the income statement. Revenue. GA is saying revenue. Let's say revenue is 40 million. COGS. What should I do with COGS? I will less COGS. Let's say COGS is 20% of the revenue. What I will get directly EPS. Oh my God. Gross profit, correct. Revenue minus COGS gives me gross profit. Agreed. Next. Selling and distribution expenses. Office and admin expenses. I will less both of these line items. Basically, these are my operating expenses. I will get, what I'm left with after deducting selling and admin, office and admin, selling and distribution, what I'm left with operating profit. EBITDA, correct. Which is, let's say, operating expenses is 2 million each. EBITDA will be gross profit minus operating expenses. Next, less depreciation and amortization. Let's say depreciation expense is also 2 million. What I will be left with? EBIT. Very good. Also called operating profit. Interest. Let's say interest paid is 10% or 8%. 10%. So what would be the interest amount? If the rate of interest is 10%, what would be the interest amount? Sorry. Some of you are saying 4 lakh, some of you are saying 26 lakh. Let's check. It's 10% of debt. Interest is paid on debt, so it's 4 lakh. EBT, earning before tax. Formula for earning before tax would be next final point, tax expense. Let's assume the tax rate to be 25%. Finally, what will I have after deducting tax expense? What do I have? I have profit after tax and my favorite, net income. Earning before tax minus taxes. Let's take care of the formatting part. Borders, font, top border, bottom border. Next, Control C. This is my income statement. Ready for Adani Group. Yes, we have not considered preference dividend over here. Next, Alt TST, Alt TS, B, Alt TS, Alt H, OI. delete all these values. Not the best way to do it still. Okay. This would be income statement for this would be income statement for NDTV. Very good. Revenue would be 10%. COGS also 10%. Gross profit is revenue minus COGS into 10%. EBITDA depreciation EBIT interest expense 10% off Adani's debt earning before taxes tax expense never ever put values in formulas always try to link fair enough. We are done with Adani's income statement. Now let's suppose that I want to value. I am available with balance sheet of NDTV. I am available with income statement of NDTV. Now, let's suppose I want to evaluate that what is the acquisition price I should pay to buy NDTV. What is the acquisition price that I should pay to buy out NDTV? What are the different approaches that I can use? What are the different approaches that I can use? You guys have learned those approaches. Please let me know. What? Correct, Nikhil. Correct. Correct, Ene. What are the A discounted cash flow valuation model? B relative valuation model? In discounted cash flow valuation model, we have FCFF and FCFE approaches. In a relative valuation model, we have various approaches like price to earnings, or relative valuation model is also called multiple based approach or comparable company analysis. When we will be going to make DCF, it would take a lot of time. So let's say we go for one of the multiple based approach, that is a relative valuation model. And the multiple that we are going to use is EV to EBITDA. EV to EBITDA. We calculated EV to EBITDA of all the companies in news channel industry or mass media industry, and we came up with a 5 times multiple. We came up with a 5 times multiple. Based on that, please give me the equity value of NDTV. Try calculating it and give me equity value of NDTV. Come on, guys, this is no rocket science. You should be able to calculate it. We have already practiced a lot on this front. It differs from use case to use case, Prajwal. Generally, during equity research profiles and corporate uh, in corporate budgeting, DCF valuation is something that is used. Nevertheless, relative valuation is also a widely accepted methodology to come up with the value or target price. Okay. SK says it's 14 lakh. 1 crore 47 lakh is the answer of Chetan. First of all, if EV to EBITDA is 5 times, give me EV. What is enterprise value? What is enterprise value? Can I say this is my enterprise value based on what we have learned in our past class? This is my enterprise value. Formula for equity value derived from enterprise value is, or the formula for enterprise value is market value of equity plus market value of debt minus cash and short-term investments. Correct? So I want to get equity value. So wouldn't that be less? Enterprise value less debt, add cash, and we will come to our equity value. Debt is cash is equity value is so 1 crore 47 lakh or 14.7 million is my equity value. Now, when Adani acquires NDTV, it pays 1 crore 47 lakhs or 14.7 millions. Adani pays 14.7 million. The question over here is, when Adani has paid 14.7 million, what is the value of assets that Adani has got in exchange of this 14.7 million. To get that value, we will have to calculate net asset value, NAV. What is NAV? When Adani acquired NDTV, what is the net value of assets that he has got? For that, we will have to come up with a schedule for net asset value calculation. Value of total assets acquired from NDTV is, can I say this value? Value of outstanding liabilities would be all the liabilities except equity, net asset value is value of assets minus value of liabilities. And remember, guys, the value of assets and liabilities should be market value. We will consider over here the book value truly represents the market value of assets and liabilities. Value of assets acquired minus value of outstanding liabilities. My net asset value is 1.5 million. My net asset value is 1.5 million. And the amount that I have paid is 14.7 million. The net asset value is 1.5 million and the amount that I have paid is 14.7 million. What is NAV? NAV is net asset value. Formula for NAV? Total equity minus outstanding liabilities. What are outstanding liabilities? Liabilities other than shareholders' equity and other equity. So we are talking about the liabilities only except equity, removing the impact of equity. So it's asset minus liability gives us the net asset value. This is total asset. This is liability other than equity. We have net asset value with me. Question alert. Please try answering it. If net asset value is 1.5 million, net asset value is 1.5 million, it means I have bought assets worth 1.5 million. I am paying acquisition price of 14.7 million. Adani is paying NDTV acquisition price of 14.7 million. Why so much of difference? Something which is worth 1.5 million, why I am paying 14.7 million for the same thing? Something is worth 1.5 million and I am paying 14.7 million for the same thing. No, 14.7 million is not the today market value. I am paying a premium so that company shareholders can sell the shares to me. Correct, GA. Very good. AV, you are close but not very accurate. Two, three students have answered this. Yes, AP, you are correct. Guys, let's take a short break. 5 minutes break. We will be right back in 5 minutes. Let me take a sip of water. I am feeling a bit thirsty. Let me take a sip of water and we'll be right back in next 5 minutes. Okay. Yes, Manyar, you are correct. Because Khushbu, you have logged in from a Zoom profile which is named Nikhil Agarwal. Probably he is your brother. Honestly, Khushi, I'm not sure about. I'm honestly, Khushbu, I'm not sure about it. But most probably it would not actually. So how would your attendance will be captured? If you have logged in through LMS, it would maybe. I don't know. AV, it would be after few days. You will get at least 10 to 15 days to prepare for the exam, and then the exams will be conducted. It would be MCQ based and also subjective questions as well. Net asset value calculation. Then we will be starting with goodwill. So basically, I am paying 14.7 million not to get assets of Adani Group. I am not interested in their property, plant, or equipment. Adani Group is not interested in the studio of NDTV. Adani Group is not interested in the inventories of NDTV, the shows that NDTV has made, the receivables that NDTV is going to collect. Adani is not interested in all these things. Adani is interested in the business model of NDTV, the name that NDTV has acquired over all these years, the goodwill that NDTV has created while being in the business. So that is why I am paying a premium than the net asset value, and the premium that I have paid is nothing but goodwill. Also, important thing, what if I would have paid what if I would have paid 0.7 million for something which is worth 1.5 million? What if I would have paid 0.7 million for something which would have worth 1.5 million? Would there have been any goodwill in that case? There would have been no goodwill, and such a scenario is rare, and that scenario is called bargain purchase. Companies going through liquidation sells their assets lower than the book value so that they can settle the claims based on priority of transaction, and such an assets are offered at a discounted price. Such acquisition of assets is called bargain purchase. Next, acquisition price acquisition price is that has been paid is 14.7 million. NAV, net asset value, is 1.5 million. The premium that I have paid is for the goodwill of the company. Okay, moving on. Moving on. Once I have calculated goodwill, where should I place this goodwill? In our financial statement. Where shall I place that goodwill in the financial statement. Asset side of asset side of consolidated Adani financial statements. Very true. Very good. Goodwill. Now, the question is how first of all, why is this is not getting matched? This is because since we have paid 14.7 million for the acquisition, it should reduce our cash balance. That is true. Agreed. I will do that as well. The question is it really mandatory for Adani to arrange for this 14.7 million from its cash itself? So if let's say this is the acquisition price, it's coming to me minus 2.6, cash balance is becoming minus 2.6 million. It means that Adani does not have so much of cash that it can fund 14.7 million worth of acquisition. Does that mean Adani won't be able to acquire NDTV? Obviously not. To buy an asset worth rupees 50 lakh, you don't need to have 50 lakh in your own pocket. You can take debt as well, right? Yes, we have adjusted goodwill over here. Now, coming to introducing you towards LBO, leverage buyout. The leverage buyout is a transaction where a company takes extensive leverage. Extensive leverage means leverage in the range of 60 to 90%, leverage in the range of 60 to 90% to fund the acquisition. The process of leverage buyout involves taking huge debt, buying out shares of a publicly listed company, which the firm believes or the investor believes is undervalued. Once the company is acquired, transform that company from a publicly listed company to private company, make operational and functional changes with respect to specialization and expertise of the acquirer and the management, try to improve operational efficiencies of the company, and to take back the company to be listed in the market and find an exit. How many of you understood this whole process? Anyone? Someone? No one? Please let me know. How many of you understood this whole process? Maniar got it. Okay. I got one response. How many of you didn't got it at all? GA understood it partially. BS says that he got the idea at least. KS says got it. AP says got it. Prajwal is asking me to explain again. Sure, I'll explain again. AM didn't got it. Now, those who replied got it, please try to write the process in the chat box. Why I am making you practice this? Because in exam, you will have to write the subjective answers in the chat box. In exam, you will have to write subjective answers in the chat box. So make sure that you write the whole process that has been covered in the chat box. For those who didn't got it, it's perfectly fine. I'll repeat it again. One step at a time. The first step is take extensive debt. Leverage buyout means take extensive leverage, take extensive debt and buy out a company. Correct, Maniar. You are partially correct. 80% correct. I am explaining again. Please do listen what I mean over here. Step 1. Remember the process is leverage buyout. Take extensive leverage. Step 1. Everyone clear? Those who didn't got it in the first place, please do reply so that I can move forward step by step. Step 1. The company took extensive leverage to buy out the target firm. That is why the name leverage buyout. Once company bought out the target firm or acquired the target firm, which is a publicly listed company, company takes that firm private. No, I'm not writing anywhere. I'm not writing anywhere. I just want you guys to listen to me carefully what I'm trying to say. Guys, are you getting this? The first two steps, taking extensive leverage, acquiring the company and making that company private. Why we are making that company private? That is the question that should come to your mind. Next part. I'll tell you why we are making that company private. Which company will I select for leverage buyout? Those companies that I feel the shares are undervalued in the market. The shares are not performing well. The shares are distressed. That company would be a cheap investment for me, an opportunity for me to turn around. I will invest in that company, make that company private, turn around that company with my expertise. Turn around that company with my set of expertise and my team. Make structural changes to the company and improve its operational efficiency. In order to make structural changes and improve operational efficiency. Once the performance of the company has improved, company has been turned around, company has been a profitable business to be a part of, relist that company in the stock exchange and get your exit. Sell your stakes in the stock exchange, make that company public again and find an exit. This is the process of leverage buyout. Two questions from my end. why we are taking the business private, why we are making the business or taking business private. This is first question. Okay, reply for the first question first. I'll come to the second question later on. To raise funds, I am raising funds through debt. So I don't actually need to take company private. I would have kept it public. Sure, Shatrughan, I'll explain this again. Don't worry. To get major stake in equity to influence and control the business. In a publicly listed company, we could have also got the major stake through an open offer. Think about it. Company shares are undervalued, then it is true, but why we would take it private in that case? Yes, Manyar, your messages are visible. I can see private so that we have a complete control of the management and reduce external influence. Okay, maybe. Yes. Now tell me, which company would have more media attention? A publicly listed company or a private company? Which company would have more media attention? A publicly listed company would have more media attention. Very true. Now, if the company is making structural changes, don't you think both good and bad news about the company would disseminate in the market quite often? When a company is making structural and operational changes, both good and bad news about the company may disseminate in the open market quite often since the company is publicly listed. If that is the case, the volatility of share price would be very much higher. Also, the company management won't be focused on their objectives and their goals. They would be under influence of shareholders, those who have invested in the company, to deliver better quarterly returns in the short term rather than focusing on the long term objectives. If that is the case, working on the objective and reaching out to the goal through developing operational efficiencies would become a bit difficult. That is why taking a company private allows the company to avoid the limelight, avoid the scrutiny of regulators. Apart from that, avoid the share price fluctuations of the shareholders. Making these changes and making it again private would give that a better exit multiple and a good profit in that particular investment. So what are the steps? First, just wait a second. Let me connect the pen tab and write down the steps for you. Yes, correct. 80. After the structural changes, the acquiring company can list it again and bear benefits from the listing, as this is also an investment. Correct. Very true. First, take extensive leverage. Okay, I didn't cover the second question. The second question was, what should be the characteristic of the company to be it a potential target for a leverage buyout? Take extensive leverage, buy out a publicly listed company, make it private, made it private. Next, improve operational efficiencies, through expertise, improving performance of the company, improving or making a turnaround story. Once structural changes implemented and once structural changes are implemented and in a once structural changes and company is in a better position, relist the company at a better valuation multiple. This is the process involved. Shatrughan, this was for you. I hope you have got it. My question is, what would be the characteristic to spot the target companies for a leverage buyout? So we learned about startup valuation, right? A startup coming up with an IPO can be determined by the valuation in the same way. Major stakes should be with the promoters. Not really. In that case, it would be more difficult to acquire those companies if promoters are not willing to sell it. What is the key characteristic of a leverage buyout model? In a leverage buyout model, extensive leverage has taken, extensive debt has taken. So don't you think to serve that debt, the target company should have stable cash flows in future? To serve the debt, to serve the leverage that has been taken to buy out the company, the target company should have stable cash flows in future. So while going for a leverage buyout transaction, the companies with stable business models, nor cyclical ones, with scope of improvement in operational efficiencies, financial efficiencies, are considered as target. Next, next, sources of finance for the LBO. What are the sources? Equity through cash, debt, total. Total amount that is required is 14.7 million. Debt is we will see what debt percentage we need to take. But since this is a leverage buyout model, let's say we have taken 85% debt. If debt is 85%, what would be the percentage of equity? Uh, I have one question. Do target company acquire dent also? What is dent? Debt also. No, we don't. Liabilities have to be absorbed. So, so the target company won't acquire debt. This debt will be in target company's balance sheet. That is true. Basically, in the consolidated balance sheet of Adani Group, that is acquired. 85% into this. This is the amount of debt that has been raised. This is the amount of cash equals to this plus this should be 100 and it is rightfully 100. Now, in the consolidated balance sheet, since we have raised new debt, apart from the existing debts, we are going to add new debt raised for acquisition. And since we have paid cash, cash will leave the balance sheet. And with this, our balance sheet gets matched. With this, our balance sheet gets matched. Let me save this. See the consolidated table and ask me if you guys have any doubt. Guys, we will have to wrap up early today because I'm really not on my best health to take the session. So we will be wrapping up 15 to 20 minutes prior to the scheduled time. Okay, I'm really sorry. Yes, I'll share the sheet. So that was all it for the day, guys. Thanks a lot. Uh, no, next week we will be definitely concluding on Saturday on the merger and acquisition model. It would have completed by this week itself, but still, since I was not well yesterday, uh, next lecture, next lecture we will be concluding our session on merger and acquisition. Yes, the sheet will also be uploaded on the LMS. Don't worry. Yes, 15 to 20 days that management decides the timeline of the exam. Yes, the sheet has been submitted in the chat box. No, for 0224, next Saturday would be your last class. Yes, we will be continuing merger topic from next Saturday onwards. Thank you guys. Thanks a lot. Thanks for understanding. I'll try to be in my best health from the next lecture. It was really great interacting with you. I'm sorry. This would have not been the best performance, but still I tried my best. Okay, Excel sheet is getting downloaded. Fine. Please let me know K once it is downloaded. Thank you guys. Sure. Thanks a lot for your lovely wishes. Thank you. See you guys soon. For Feb 24 merger and acquisition was last 0224. This was the last part. Okay. I'm muting myself and I'm waiting for 2-3 minutes more so that the sheet gets downloaded. Those who have downloaded the sheet can leave the meeting room. It's perfectly fine. KG, that won't be possible to share the whole sheets, all the sheets again. Yes, Arjun, you will be having those sessions. Uh, sure, thank you. Thank you. Bye bye. Take care. Have fun. I'm ending the meeting. Thank you, guys. Bye bye.